Hello everyone and welcome to today's Trading the US Open live here at the Live Trade Room, and today is Thursday the 27th of September. So what we look to do during this session is to look for high probability trading opportunities. We have a bit of a process where we look to isolate and identify these high probability trades, and with a view effectively of looking to get into those trades where we're looking to manage our exposure to these markets, looking to cut our losers short. And then when we get those opportunities, when the markets do open up and do move, then we're looking to let our winners run as best we possibly can, despite the relevant choppy markets which we've been experiencing as of recently. All with one aim, and that is to book in consistent returns when we trade and get to see that P&L ticking to the upside on a more of a medium and longer term basis. It's never really important to be super focused on the next trade, just because you don't want to put all your hopes and fears and anxieties into that trade. You want to be able to trade these markets with an open mind, and just stick to your plan, stick to your approach at all times with consistency and of course discipline with regards to your capital. So what you'll get from us here at the Live Trade Room is an authentic trading environment, real life trading with real capital and real traders making decisions as these markets unfold. So without further ado then, if I could just start with our risk warning, please do familiarize yourself with our risk warning currently up on screen. Okay, good. So what we need to do now is to just have a fairly brief review of potential market moving news events. We want to understand, appreciate, and be aware of any potential news events that could impact either our trades in a positive manner or indeed in a negative manner. And we do have some dollar related news. We're currently into dollar related trades. We're looking to sell the euro dollar at the moment and to also sell the Aussie dollar to the downside. So those are the trades that we're looking for. And we do have a durable, a core durable goods orders. It's a monthly number, not inclined to be earth shaking by any stretch, but and if we can see, like as we look back, you can see it's quite an erratic figure. So more recently, these have been sort of relatively positive numbers. As you can see, a couple of negatives in there over the last year or so. But broadly speaking, generally on the positive side as of recently. So let's see if that continues. We're expecting a 0.4. So we're looking for a strong deviation off that number. In addition to core durable goods, we also have our final GDP figure. Now, this is the final GDP figure of two previous figures. We have an advanced figure to begin with, which is a bit odd, but it's a bit counterintuitive. But there you go. The first GDP figure is an advanced figure. The preliminary is the second one, and then we have a final GDP figure. So again, if we look at these charts, you can see how it potentially excels to levels which we've not seen since back in December 2014. So it would represent really strong performance. This is only a quarterly figure coming out of the US, and it's really in line and in support of the general upbeat and the sentiment behind the US economy. So it kind of fits in now. We had the FOMC basically say the same thing last night. Increase rates, continuing to increase rates, and conditions like these are just normally in normal market conditions would be we'd see a considerable amount of strength creeping in to the US dollar, and that's what we're looking to trade. And we looked at a couple of opportunities today. So what we'll do is we'll come back at 1:30 and we'll see how these news events impact the US dollar in a little bit more detail. For the remainder of the session, we have Draghi, we have a couple of central bankers due to speak, but I suppose the most important one would potentially be the opening remarks at the European Systemic Risk Board annual conference. So that could be a little bit of volatility there for the euro, but we've got two other central bankers due to speak later on at various different events. So we'll come back at 1:30 for a bit of an update. So so with that in mind, then let's go over and see what's going on with these charts. We were, as you can see, we've had a nice explosive move to the downside during the Asian session, and as we get to our trading desks, the market has attempted to push lower, but has kind of moved sideways effectively with a slight sort of pullback aspect to it, which is fine. You know, the market will do whatever it wants to do, but we are firmly involved in this market to the downside. And clearly for the Aussie dollar, a break below the 72.21 level, we're only 5 pips away, would be a new low in the Aussie dollar, and we'd expect this market to continue lower. The euro dollar is very much in a sideways. We looked to sell these levels once already this morning. Took a small loss just because the market just started to reverse and just break above these levels. We didn't want to give it much more room. It was just in case we had a series of structural failures to the upside. That is all very, very possible as well. So we wanted to see if we did pull back and we did create more structural failures to the upside, we'd look to sell it at a much higher price. So that's why we didn't want to give the trade that much more room. Now we're seeing the S&P 500 extend to the upside, and as a result we're seeing the euro yen and the pound yen look like they're creating structural failures to the upside. And a little bit of strength coming into the British pound, as you can see. So these are the trades that we were looking at this morning. And I suppose the reality of it is we've not seen and experienced a move in these markets since the European Open this morning. So we're still in sort of sideways moving price action. But we will look for opportunities again in the euro dollar, certainly the Aussie dollar, and maybe the pound dollar as well, if we can get some good opportunities. On the right hand side of your screen, we're looking for the S&P 500 to continue lower, in which case we're likely to see a little bit more of an aggressive drive to the downside in the euro yen and the pound yen, although we've not seen that as of yet, of course, as we look at this. So we want to get our correlations right. We want to understand what's moving in other markets and what direction those markets are moving, and the impact that those can have on our trade selections. So so what I think would be a decent idea is to we'll start with the euro dollar, and we'll just flick through these, see if there's any more opportunities. So we've been selling since these highs up here. We had a nice flush down, a little bit pullback this morning, nothing excessive. The actual level of resistance is a little bit higher, the 1724, and we're currently down at these lower levels as we speak. So that's the euro dollar. So that's the euro dollar. So we do expect it lower, but clearly it's taking its time to move lower. We've now seen some structural failures to the upside for the pound dollar. That's quite significant. So that might be a market that we might take off the list, certainly over the shorter term. The yen, the dollar yen is strengthening. The dollar is strengthening against the yen, should I say, and looking to squeeze to the upside. The dollar Swiss has extended and broken above the 96.99. We're now above the 97.12. We've already seen a really strong move in this market today now, so it does remain to be seen how much more upside there will be. And don't forget, we are still technically pulling back off a low. So that is, from a purely a price action perspective, that's what we're seeing here in the dollar Swiss market, just this strong pullback to this level. Dollar CAD is extending to the upside and looking quite strong, and now we're very close to breaking that weekly high of the 30.65. It'll be interesting to see how this market interacts with that price point, and we've been talking all week about the potential for this market to continue to the upside. We just decided to get into the Aussie and the euro dollar to the downside, so it was just we chose that over the dollar CAD, but as you can see, that is equally a good, positive, productive trade to be in. New Zealand dollar is getting very, very close to our 66.29. This could be the next trade that we could get a really good opportunity to sell this market down to the downside. So we do want to see if this market breaks below the 66.29. Then we might be able to add this to our dollar position. We're getting the pound strengthen. When we get these long tails, it does represent a little bit of indecision in these markets, which is not great. But I suppose the basic fact is this market is continuing to move lower, even though it's really, really choppy price action, and it's not that easy to trade effectively. So the pound is really sort of strengthening as we speak. You can see the strength against the dollar and the euro. Not quite the same for the euro and the Aussie, as you can see. So we're talking about pound strength here. The problem is it doesn't really make a huge amount of sense if we look at the daily time frame to be looking to buy this market. It's not great price action. So what we may do is to just take this off our list for now, but maybe look at it again if some weakness starts to creep back into the British pound. The gold market effectively moving sideways, a bit of a downward pressure, probably in line with the strengthening US dollar. And if we get a break below yesterday's low of 11.90, then it might give us a great opportunity to see if we get a bit of a squeeze to the downside in the gold market as well. The US oil is really flirting with this 72.52 level. We've been looking at it now for 4 days. We've failed to break above it, and we're not really selling off that far beneath this level either, so it's really looking to hug that 72.52. So it just shows you how important it is effectively. A bit of strength coming into the S&P, which is supporting the more recent yen weakness that we're seeing in the euro and the pound, and the dollar yen as well. A bit of interest is coming back into, it looks that way as things currently stand, coming back into the US equity markets. Doesn't really give us a great high probability opportunity to get in these markets to the upside. So maybe we just observe, but a potential trade could exist over the next couple of trading days. And what I mean by that is, if I just get up my pen, is that you know, if tomorrow if we start getting a bit more indecision, and then we get that sort of structural break beneath this level, there's your high probability trade to the downside. So let's see if we do get that rollover price action. Not really that interested in buying these lows as things currently stand now. Tomorrow, if we get a confirmed break above, if we got a bit of indecision today like we're seeing, and we get a break above the daily high, then it would give us more reasons to get in this market to the upside. Similar situation for Dow Jones. The Nasdaq is pushing higher. We'll see if this market has the potential to close above the 75.93 level. Hopefully it does. And the FTSE 100 and the Stocks 50, Euro Stocks 50 number. Just a bit of strength, but there's this descending level. So let's see if we do get any real momentum to the upside, because what's going to support the increasing price in the FTSE market is a selling pound. So that might give this market a little bit of support to the upside. Oops. Excuse me. So we'll come back to the news event at 1:30 again, sort of pretty shortly. So in terms of a trade plan, I suppose it's worth keeping an eye on the gold market. So we'll have a look at gold. The euro yen we'll continue to look at. That's looking a little bit on the horrible side now. We'd like to get into this if it wasn't so outrageously choppy. We should look at the New Zealand dollar. The Aussie dollar threatening to squeeze lower once more. So what we might do is we might discount the gold, the pound dollar and the pound yen, and replace it with the New Zealand dollar and the gold market. So that's what we might look to do here. Just horrible price action now in the pound. So unless that sorts itself out, let's, from a trade plan perspective, let's go ahead and we'll work with most of these markets. The euro and the pound, sorry, the euro dollar and the euro yen market we can continue to look at. So what we're going to do is we're going to just swap this out with the New Zealand dollar market. So we're not too far away now. Sorry, let me just get to grips with that level. There we are. So we'll keep an eye on the 66.29 level. So it's not much lower than where we currently are. So these are our dollar pairs. We're just replacing the pound dollar with the New Zealand dollar, and we can keep an eye on the yen. I'll tell you what, we'll just elevate this a little bit just to see how the yen reacts to the price action in the S&P. And the last market we shall look at would be the gold market, just to see. We can place this just down here. Okay, so the gold is extending lower again, so we're looking like we're going to get a bit of dollar strength start to creep back in. Yesterday's price action was particularly difficult, breaking higher, really strong reversal, probably retracement of 90% of these previous highs off the lows, and then sort of grinding action to the downside. So really quite tough price action there in the gold market. Excuse me. So maybe we're waiting for the news event in about 7 minutes. Maybe that will give it the extra thrust to the downside that we would ordinarily look for. Oops. So I've just posted a comment again into our chat box. So feel free to post any comments that you might have. You can do so in your chat box. Okay. So I'm just looking at the time now, and we've got 6 minutes before the news. So we might sort of go over to that now in a few minutes. These are the markets that we're really keeping a close eye on and taking a strong look at. So a market that we really do quite like the look of would be the Aussie dollar. And there's plenty more scope to the downside. And what we like is the fact that this market has moved sideways literally for a whole session now, and pushing lower. However, would expect this market to actually continue lower with a relatively small stop loss, and it would be below the 72.20 level as well. It's just I would prefer if this occurred after the news rather than just before the news. We don't want to get into this market for some really negative dollar news and for it to swing back sort of 30-40 pips. We don't really want to see that happen. So if prices can hang around here, if the news can come out and then we get a bit of volatility lower and we can get in at a reasonable price, then with a nice concise stop loss, we might look to take this market to the downside. And as you can see, there's plenty scope to the downside now. We've broken this little area in here of really awful price action, as you can see, for the last 5 days. So this would be a re-emergence of the trend, or re-establishing the trend to the downside. So this is why we haven't had much joy trading this market over the last week, but hopefully now we'll be able to sort of see if we can capitalize on this to the downside. So yeah, it's important to keep an eye on the S&P if we're going to be trading the yen. So in preparation for these moves, let's now just bring up this news event, and you can hopefully see how the markets react to these events. Might be a little bit on the tight side to be able to see everything that we need to see. We can look at the euro dollar here. So these are the two numbers in here, the core durable goods. And we'll just keep an eye on these because we are interested in selling potentially all three of these markets actually if we get those opportunities. Yes, they are correlated. They can both obviously offer various different returns on those trades. So we're just a few seconds away now from the event, and if we get a green light from these events, of course we can get positive news, negative price action, but it wouldn't be a bad idea if we get some supportive numbers coming out here to look to get into these again to the downside. So let's see, I think the news is out now. So 4.2 was expected, so it's come in line with expectation, and durable goods, should I say, slight, well, sort of mildly negative, isn't it? Positive on the durable goods order, significantly positive, mildly negative, kind of a mixed bag really. You wouldn't expect it to. Slightly higher, more unemployment claims than expected. It's slightly more negative than it is positive. We'll still get into these sell trades, and we can get into the euro dollar as well. And let's see if this carries, because the news is not really significant enough for us to step off the dollar. So we were already in these trades once already today. And with that news event, we are quite happy to get into them again. Sort of mildly negative, but nothing of any major importance. So we'll just take this high in here. So we've got into these on the 15-minute time frame. So we're waiting for the next flush to the downside, then we can definitely work with this as a more appropriate stop loss. We get the gold market just approaching this 1190. You can see that the New Zealand dollar is just, it's at a very important level. Gold is extending lower. The only problem with the gold is we'd obviously be adding significant support to the a weaker dollar, and there's a lot of resistance below the gold market, so we might just focus on the euro dollar and the Aussie dollar. But definitely a viable trade exists just below the 1190 level. We do have an issue with a stop loss as well. It would be quite a significant stop loss. We can see the so it's the next move to the downside that would interest us in the euro. So the initial impulse was lower. We've got a little bit of a pullback off these lows, which is not a major problem. But we do want these markets to start continuing lower, and okay, we've got a 16 pip stop loss in the Aussie dollar. A slightly bigger stop loss we don't really need to have such a big stop loss in this market. It's a 1704. Yeah, let's bring that down. Let's bring that down a lot more. Still a 27 pip stop loss in the euro dollar. Slightly more than normal. So we need to wait and see if we get another flush to the downside. So the New Zealand dollar has just, we're only sort of 6 or 7 pips above the low, but we've had a nice strong bounce off that level since this news has come out. So it's the next flush lower that we're looking for. Yeah, hi Renko. Yeah, I mean, breakout trading is a viable method to trade markets, just as much as, I guess, as pullback trading is. The reason being is there's something very important about a breakout trade if you understand the psychology of consolidated markets. I'll come back and have a look at it in a second. We can see these markets flushing down now. Let's see if we get to see some continuation. So most markets obviously consolidate, and that in itself is not a major problem, because something quite significant is happening with a breakout. So let's just take these two levels in here. There is traders that will be looking to buy the lows at opportunities if they possibly can, to see if they can capitalize on markets pushing higher. And then we've got other sort of traders and scalpers that will be looking to sell these markets from the highs. So this is effectively when we get sideways moving price action. You have a battle between buyers and sellers where no one is effectively winning. But what you often have is effectively a build-up of stop losses. So anyone that's entering at these highs are very likely to build up. There's a commitment of others to sell these markets, and what they do is they often place these stop losses, and this is why you hear kind of stop loss chasing and things like that. And if you get a build-up of these orders, obviously markets can be manipulated to take these traders out. But if you capitalize on this as a breakout, and if you're looking to, if you can understand that you're trading consolidation, and you know that the psychology is such that if this market breaks out to the upside off this area, what you're effectively doing is you're turning all of these stop losses into buy orders. So they're obviously to protect your capital, and if you're selling a trade, these are then sort of a collection of buy orders. And what you often get through periods of strong consolidation is really strong breakouts because of the build-up of orders which exists. A lot of stop orders placed in at these levels, but also buy orders placed in at these levels. And it's a very effective way of trading the financial markets if you can, and that's what I mean. The longer the consolidation, potentially the larger the potential breakout is. And if you can capitalize on that trade and understand what's happening, you can certainly get a really strong positive risk reward off the back of breakout trading. Now, we don't just trade breakouts. We have looked at a lot more breakouts, I suppose, over the last few weeks than perhaps we normally do. But it's because the markets have been moving sideways for so long, is ultimately a bit of an issue. So when you get these consolidated markets, you can either sell the highs, which is obviously we have the gold market squeezing lower. So it's coming up to the weekly low, which is the 1187 level. And there is the descending level just below that as well. So we're trying to get those to conform. So now we can look at the New Zealand dollar. Let's just see if we get that close at this price. So there we go. I think we're getting the close now. Okay, so we've got the close below our long-term structural level here, the 66.29, where we're just breaching below it. So we just want this market to just tick lower, and then we can gladly get into this market as well. If we get a little tick lower, we have sort of a 10 or 11 pip stop loss in this market as well. So we're still in this phase where we're keeping these stop losses very low. So as you can see, we haven't quite got the flush down that we would like. I'm sure it's probably coming. And I suppose Renko, good to have you with us again. Actually, I don't think you've been with us for a while, Renko. So let's what we wanted to do is to wait for this confirmed break beneath this level, because if we look at it on a 15-minute time frame, you can see it's been a daily low. It's a previous daily low, and there's been a lot has happened in this time. And what we're trying to protect ourselves against is, I mean, we can get a rejection, we can get a false breakout, we can get a market that thrushes lower and then pulls back up. And there's not really an awful lot breakout traders can do about that. But what we are protecting ourselves against is, if I just take this off, is the market clearly sort of bouncing back to this level and getting in on a pullback and getting the extension above the actual level, and this market doing that, because that is where the sellers come in and that's where the buyers come in and blow the sellers out of the market. So you're protecting yourselves against these types of moves. Now the false breakouts, unfortunately, it's an occupational hazard. There's not an awful lot you can do with them. But when you do capitalize on these, you're able to, I just want to zoom in quickly into this. You are able to often see really quite strong explosive moves. Now, of course, we don't always get that, of course. And I suppose in terms of the success rate, it would certainly be reduced, but the profit or the potential positive risk reward is often greater. So it's a bit of a trade-off. Now, if we miss the breakout trade, which is what we're getting into, technically it's what we're getting into with these trades. If we miss those trades, so let's say we just get a really strong breakout to the downside, and if we don't get in on that breakout and the market pulls back, then there's our pullback trade back to previous levels of support, and you get other opportunities to sell it. So it's not so much that we choose or favor breakouts over pullbacks. We will trade the breakout. If we miss the breakout, we look to take the pullback. But we kind of want to see more constructive price action than what we're seeing, if we possibly can. We'd certainly like to see the euro just flush lower properly, and then we can use these highs and take risk off the table with this market. Yeah, the 1656, is that right, Renko? Is the 100 SMA on the daily for support. Yeah, the 1656, yes. So, I mean, that is probably a level that we'd probably look to take some profit if we get a squeeze down to those levels. So hopefully we get a little bit of a move down to that level for sure. J4FX Diamond, good to have you with us. What do you think about the pound dollar? We were looking at it all day, certainly in this morning session. Let me zoom in a little bit. So what we do is we have a bias to the downside below the 39 level, as you can see, and we've already had an explosive move, but a lot of this move occurred during the Asian session, and since then we've just had, unfortunately, strong sort of pullback price action since early this morning. So really, it's not giving us the fantastic opportunity that we would have expected to have had. But we were looking to trade it this morning. That and the pound yen. We've taken them off our list just because of some potential better opportunities in other markets. So we've decided to do that. Will the pound yen go long or go short? We absolutely have a bias to the downside. J for FX Diamond. Let me show you what I'm talking about. So what we need to keep in mind with the yen pairs, and again, clearly we're looking for opportunities to sell below the 148.27. That's yesterday's low, expecting continuation. We got that again, similar situation, a pullback since before the European Open, and that's all that's happened since. Now we still expect it to the downside, so if you ask me what's my directional bias, for now it's very much to the downside. What we need to keep an eye on with regards to the yen pairs is the US equities beginning to strengthen, which is why we're seeing the yen weaken against the pound. I mean, there's a bit of strength coming into the pound, but the yen is reacting to what's going on with the US equities. Yesterday it was selling off, so the yen was strengthening, and today now there's a bit of buying coming back in, and we're seeing the yen just come off its stronger lows in the pound yen and the euro yen also. So what we're actually seeing is pound is actually stronger than the euro and the Aussie, which is why we've contemplated getting into those trades before. We're seeing the potential for this market to flush lower. So hopefully we do get that move. So we do want, of course, we do want these markets to flush lower when we want them to, but they'll generally do their own thing, and then we'll probably get a bit of a spike lower in the near future, and then we can mitigate risk, take risk off these trades. But right now it's attempting to break lower, and it's not really doing so just yet. And just going back to your comment, Renko, is trading breakouts profitable? Yes, they absolutely can if you can apply them consistently. The problem is most people can't and don't really see the, I suppose, the setup required to trade breakouts properly. The longer the sideways pattern, the greater the potential or the explosive move can be, because it'll come up on more people's time frames, and the higher time frame you go, the more explosive the move can get. So if you're trading small time frames like minute charts or 5 or 15 minute charts, you know, if you can get the 1 hour and the 4 hour traders entering these environments as well, you get really strong explosive moves. And if you see those levels on a 1 hour chart and a 4 hour chart, then it's likely to add over 100 trades. You're likely to be correct more often than you're not. And then when you get those moves, you're likely to get a significant multiple of your risk in each of those trades. So what has been a strong theme the last few weeks is the lack of follow through that we've experienced. So breakouts haven't been performing like they can do. Not too sure what the reason for that is. Just it's probably more the market conditions. I don't think range-bound traders are that pleased at the moment either. They're kind of seeing a range and they're selling the highs, and then they're just getting these little small breaks above those highs. The breakout traders are getting the reversals off that. So a lot of these things make it very, very choppy market conditions, and it's more of an issue of the market conditions, not so much the opportunities for trading the breakout. So what is basic of making absolutely correct support and resistance? I mean, can you show me? Yeah, support. How do we make support and resistance? Yeah, interesting question. Let me. We can take away some of these levels. I mean, this just represents the intraday low. This represents the daily low. We could certainly take away, I think, a few of these now. So what we're looking to do, we can start on a 15-minute time frame. Is that, and I suppose this isn't a bad opportunity to share this with you. So if you zoom out and do a bit of multi-time frame analysis, you can see that this level in here has become a significant level of resistance. Markets have bounced off this level on numerous times. And if you're trading support and resistance and you're one of those traders that sells the highs, then they're your opportunities for you. If that's your style, if that fits in with your approach. Now the breakout traders will wait for this and then they'll capitalize on that move. Your pullback traders will wait for this and they'll capitalize on that move, and they'll keep doing so on a regular basis until the market makes another floor and ceiling. So what was previously a ceiling preventing prices from pushing higher becomes a floor preventing prices from pushing lower, until again you capitalize on that breakout. So hopefully I'm making an attempt at trying to sort of answer both Renko's and J4FX Diamond's questions and queries about support resistance and how powerful they can be. Now again, if you identify these levels, maybe this is a bit tough to identify, but we have the 11800. We've been talking about it all week, and simply there's traders there that will be selling that bit of price movement, and they'd only get a couple of opportunities at this level. Might struggle to get in at that level, but it depends on your approach. So as you can see, there's opportunities for breakout traders, range bound traders, pullback traders. There's a whole variety of different traders operating in this environment, and they operate on multiple different price time frames as well. So there's a degree of complexity in here. We're only looking at this on a 15-minute time frame, and what we do here at the Live Trade Room is we identify strong levels of support and resistance, and we're talking about significant multiple highs and lows, you know, where the market respects those levels. So we know that the 1724, looking back at historical price action, that the 11724 is an important level. We've seen how it's prevented prices from pushing higher until we get the breakout. And we've also seen that level be supported on a number of occasions. So it's more of a case of deciding what type of trader you are and how you interact with these markets and what your approach to risk is. So all of these traders will have their stop loss placed above these levels. Some of them might take profit, some of them won't, but there's going to be a number of stop losses in a place that, like here. They all convert to buy orders. So when we get this little breakout at this price here, you get a really strong explosive move. So Renko, there's your explosive move to the upside. Now you don't always get that clear-cut opportunity, but that's what you're looking to do, and that's what you're looking to capitalize on. So in a relatively short period of time, you can capitalize on a breakout and see this market explode in your favor. I'm just looking at the price and I can see it just extending further lower. Does that answer your question, guys? So in terms of how to identify support and resistance, you want to see price respect a certain level on multiple occasions, and that's why we often just use horizontal lines, because it indicates to us if I take away a lot of these scribbles, you can see that there's a level in here resisting prices, and then there's a level supporting prices over here. And you can see the 118. Yes, we did have a slight breakout, and this was one of the trades during the week that we were very interested in buying. Buy the breakout of the 118, expecting this to be the next level. So we had price action moving sideways, we had it moved up, and then at this point we were expecting the next move to the upside. Never arrived. It was a rejection, and it was that rejection that allowed us to get in last night of this level here, because we failed to make a new high. And it's just putting all of this information together in a coherent fashion, and unfortunately this is what so we're getting that plunge lower. So I'm going to, sorry, I thought I'd got into the New Zealand dollar, and I appreciate that hasn't been the case just yet. So we're finally getting the move in our favor. Even the gold market is extending nicely to the downside. I do want to get into this market. We're only a few pips beneath the low. Maybe we just manage those levels. My pleasure, J4FX. Do you use price action signal criteria? Do we use price action signal criteria? Yes, we do. We need to get a confirmation below that level. So I suppose this is kind of a poor example really, but because it hasn't followed through as we would have anticipated. So if we look at a bigger time frame, we can see that the 66.29 is a level that we're interested in. You could argue as well that there's actually supporting levels just above it. So between 66.33 and 66.29, there's only 4 pips difference. But you can see that that is our interesting sort of levels of support. And recently you can see the market be supportive of that level. Again, buyers coming in, often stop losses at these levels until you get the breakout to the downside. So that's the level that's really quite important. But how do we know to trade it, and what criteria do we use? I can see this market creeping lower as well. 47. We need to see a close on the time frame that we happen to be trading. So if we're trading a 15-minute time frame, then we'd want to see a close of that market on a 15-minute time frame. If we're trading a 1 minute time frame, then we would want to see a close of that market. So going back to our levels, if you didn't get in on this close here, which there's arguments not to, because there's a level just marginally lower to 66.29. So this is the candlestick in here that indicates to us we want to take this market lower. But we do want to see this level be broken. So that's our criteria, is to get the follow through. So we get the close, and then we need to see whether we get the follow through to the downside. In this case, we got a pullback off that low, which is fine. It's absolutely how these markets trade. And then this is your second opportunity to get in. This is your first close. This is your second close beneath the 66.29, and in this occasion it has just moved lower slightly. So what we can do is we can trade a pullback. So these are the breakout trades. That's the criteria we use. The pullback trade is just identifying the level, and when we get price turning around at that level, we look to take that to the downside as well. So we're very proactive with and we try to be really consistent as well in our approach and the criteria we use to get in and out of those trades. So I do hope that makes some sense for you guys. What importance does Fibonacci retracements have? Huge importance if you use them consistently and if they support your trade bias, i.e. If you are looking at this market and if you have a directional bias which suggests that this market is moving to the downside for whatever reason, like you could have had a bullish bias up to these levels, but now we very clearly have a bearish bias. And if we put in a fib retracement, and this is the 23% level, and we can see it's a level of support resistance, so we'd rather trade price action and just look at what price is doing. But if you say to me, we take swing high to swing low, and there's your 23%, and that gives me more confidence to sell at that level, I'm all for it. I really am all for using indicators, and not just the Fibonacci, but every indicator you could imagine. If it reinforces your bias, if you have an understanding of real price action and what price is doing, which is what we are advocates of. Sometimes we see traders that are trading because of a moving average, and they're literally getting in and out off the back of that, and they're not paying any attention to what price is doing, what direction that market is moving in. They have no understanding of multi-time frame analysis. They don't have an understanding of what's going on a daily time frame. So, and that's when using these indicators can become a problem, when they become solely reliant upon in terms of your trading decisions. So that's certainly our opinion. We know there's many educators out there that are firm believers in solely using certain indicators and even their own indicators to allow them to get in and out of these markets. I suppose what we're doing is we're looking to trade with consistency in terms of our approach in a live dynamic environment where we look to capitalize and understand what's going on with our ability to identify opportunities, with with how we get into those trades, how we manage the risk, how we mitigate risk. And I'm going to do that now very shortly. So I'll show you how we get into markets, and if we get a movement in our favor, we can then look at mitigating risk with a view of then looking to book in profit if the markets continue in our favor. So they can help, but only if they reinforce your bias in a particular market to either buying or selling. They can be useful in that capacity. So we are getting a bit of an extension lower. We'll just have a look at these markets. So what we can, there's no need to have this level of stop loss now in this market. So we can literally bring our cutoff. So we've now removed probably half the risk on that trade. So now we've got a 15 pip stop loss in the euro dollar with the expectation for this market to move lower. So that's fine for the time being. And let's see what level we can work with. So this is our level in here. We've got a nice solid breakout. We look at this high in here and we'll utilize that, and we'll take this much risk, probably 10 pips off this trade. $25, $72.25, $72.27. So yeah, that leaves just a 7 pip exposure. So we've got 15 pips on the euro dollar, 7 pips on the Aussie dollar. We've got into them, we've given them time to develop, to evolve, to move to the downside. They've made that move. We're now in profit. So now we need to manage this from a profit perspective. We'll hopefully get some continuation to the downside. That would be quite important for us. I do apologize, guys. We do have traders of ours over in the live trade room right now, so we're going to have to switch across, I'm afraid. We may look to add the New Zealand dollar to our trades this afternoon. We had a good trade in the gold market. The thing that's concerning us is the potential support just below these levels. If we look at it on a daily time frame, you can see it a little bit better. We absolutely do anticipate this market to continue lower. We're now below this level. We do have this descending level, and this can often provide a little bit of short-term sort of pullback in this market, but it's definitely a market that we are looking to sell. We've been selling this market many times, and now we're currently below the 111.87, and could still give us an opportunity, which we might get into again very shortly. So we've mitigated risk on our trades. The disappointing thing is this morning we were looking to sell the euro dollar and the Aussie dollar, and unfortunately we just got grazed out on those trades. We were wanting the markets to again respond to a certain level, and it didn't, and it was in a process of kind of pulling back, and but we only got stopped out by just a pip or two, and then we got the continuation to the downside. So got very close to a couple more really good profitable trades to the downside in the euro and the Aussie, because we were looking to keep them for the day. So we would have been in a significant profit on those two trades if we were still in them. But that's the nature of trading. We didn't want to really get into those at sort of 11:30, 12 this morning UK time. So we were quite happy to look at them again in the US market when the news comes out and see if we get a bit of an impulsive move lower. So we're looking to keep the euro dollar and the Aussie dollar to the downside, and we might add the New Zealand dollar as well. So so there we go. Hopefully we'll have a good trading day ahead of us, and we don't have any really choppy markets to contend with. But if you would like to, please do give us a thumbs up, or do subscribe to the channel if you've not already done so, and do click the bell as well, and you'll be notified when we go live. And you can also connect with us through our Facebook, Instagram, Twitter, and LinkedIn. So just to let you know, we don't have live trade rooms on Fridays just yet. So it's just Monday to Thursday, and we do hope you can join us again for those. So all the details are there up on screen. So if you would like to join us, guys, if you've not already done so, we're still currently giving a 14-day free trial. Just look at the information below, and if you'd like to join us, sign up. You get 14-day free trial. We offer over 76 webinars per month. So we have intraday trading, and then we also have our capital growth webinars at 9 o'clock every night for 30 minutes, where we trade daily time frames, which we're currently in a sell trade in the euro dollar and the Aussie dollar. So we do have different live trade rooms for you depending on your availability, so hopefully that shouldn't be much of a problem for you. And if you do decide to stay on after the 14 days, then there is just a fee of $9.99 per calendar month. So either way, we hope it's incredible value for you. So click on the link and do feel free to join us if you wish. So thank you very much for joining us. We need to switch over to the live trade room now because our members are there, so apologies. I do need to shoot off. So thank you very much for joining us. Do take care, and we'll see you next time. Bye-bye.